Hi all, welcome back to our series Day Trading Explained. This is our first video where we're gonna go actually deep into what is really day trading and focus on day trading practices. So far the first video was a beginner start. The second video we discussed what makes the US stocks so exciting. In the third video we talked about how much money can you make as a day trader. In the fourth video we'd ask how much risk you should assume per trade. And in this video we want to answer a question which is not the most important but part of the whole equation of day trading. Which stocks you want to trade? You want to trade one stock every day? You want to talk about it and tell us why? Do email us. It's possible to get on board with one stock which is volatile, let's say Tesla, and trade it, learn it every day. And then my question is, do you eat the same food every day? And the answer will be probably not. And again, after a while, some stocks stay volatile, but the volatility dies in and out. And you can observe the daily chart of Tesla, under which in some trading days the range is anywhere between 1% of the price to 2% of the price, and the other days where the range is 5% or more of the price. So the Tesla is not trading or not serving the same menu to traders every day. Having said that, how many stocks there are in the US equity markets? Let's take a look. We asked GPT a couple of minutes ago, and the GPT says as of mid-2025 there are roughly between 6,000 and 7,000 stocks that trade on the US exchanges. Both of them, New York and NYSE around 2,400 listed stocks, NASDAQ 3,500 listed stocks, and there are obviously many others that are not listed, but we don't trade them. We trade only listed stocks, the best of the best, and that's it. Let's say 6,000. Now out of 6,000, obviously as a day trader you'll understand that you cannot focus on 60, which is 1%, and you cannot focus on 30, which is half of 1%, and you cannot focus on 10, which is way below. So on how many can you focus at a given time? Let's start with 4. Okay, you can focus on 4 stocks. When I say focus on stocks, I mean you look at the intraday price action based on the intraday chart. That's what I mean focus. You don't look at the symbol and you see how big the intraday change is, if this is the strategy that we're going to use to locate the trading candidates. Now let's move this from our face and look at this chart. That's RGTI, a company that means nothing to anybody, including me. I don't know what's the business of this stock. All I know is that a couple of days ago, on July 2nd, it had a very nice uptrend. It started the trading day around what was the price then? 11.50, and closed the trading day at 4 p.m. at, let me see, 4 p.m. at $13 plus. So that's nearly $1.80 on an $11 stock. You do the math, that's more than 1%. Sorry, more than 10% from the lows to the highs. Now, okay, this is a stock where you can make money because it's moving a lot relative to its price, and it doesn't matter if it moves a lot, but how many shares you're going to buy? You're going to buy 1 share, you're going to buy 1,000 shares. The volume on that particular day, I don't have it right now in front of me. I can, you know what, let me access the volume, YTD, and look at yesterday, and the volume in this stock was 65 million shares. You can divide it by minutes and by minutes, and then decide how many shares are being traded per day. That's a lot. So that's basically the chart. Let me revive it. Okay, here it is. That's the stock that we were talking about, RGTI, that was Wednesday. So again, RGTI trades from the highs to the lows, more than $1. Volume is very good, so you can buy almost any amount of shares that you want. And you look at the chart and you find out an entry point that's technical to you. We're going to talk about it in our next chapter, finding the right entry points, and you find the risk. In this case, the risk is, as you can see, anywhere between 12.12 and 12.2. That's 10 cents. So if you buy 100 shares, you risk on this trade 10 cents. It means $10. Okay, that's basically roughly 1% on the risk of the position. So let's say you buy 1,000 shares, then you risk 10 cents times 1,000 shares. That's $100. And now let's say you bought it at 12 and you're very lucky and you're going to sell it at 13, and you're going to make some money. If it is 100 shares, you're going to make $100. If it's 1,000 shares, you're going to make $1,000, and everybody is fine and dandy. But it's not really fine and dandy, because like we just said a couple of minutes ago, there are 6,000 stocks in the US exchanges, both of them, Nasdaq and New York. How on earth are you going to get to RGTI? And why would you get to RGTI? Maybe during the same time Tesla is moving up, of course I'm making it up, $25 in an hour, just for the sake of argument. And you're not looking at Tesla, you're looking at RGTI. And of course there are so many other stocks that are moving around. So there are 6,000 different animals running around you. As a day trader, you need to sort them out. Okay? So in order to sort them out, we have what we call tools that the brokers are supplying us. For example, one of the important tools, or the most important tools that a broker will supply to us, is a screener. And what is a screener? Let's take a look at this example. We have here a screener where we are screening US stocks based on their market cap, and you can see that they are listed according to their market cap. Let me bring in the marker, and you can see that we have here Nvidia, a lot of T's there. The T means trillions. Then there's Apple, Amazon, Google, and Meta, and so forth. So we can trade based on this list according to market cap, and this list tells us stocks that their market cap is above $500 billion. If you want to trade those type of stocks, you're more than welcome, and you can make money if they go up or down. The liquidity is tremendous, and this is one of the most amazing lists available to traders in the US equity markets. But again, let's take a look, for example, at the price action of one stock in this list yesterday. Let's take a look at, just for the sake, let's take a look at Meta Platforms. Hold on a second. Let's Meta Platforms yesterday. So we can see that Meta Platforms yesterday, and let's ignore that we traded half a day yesterday. You can see that the stock kept up versus the previous close, okay, and traded basically lower. So if you were buying at the open, let's say you bought 100 shares of Meta at the price of $725, you invested therefore $7,200. Is it $7,200? Yeah, I think it is $7,200, and the stock moves lower and you lose money, and that's fine. Okay, you don't lose a lot of money, but you lose. But again, why would you choose Meta? Under this list, okay, that I just posted here in the room, where is it? There are, as you can see, 16 stocks. You have 16 to choose from. Why choose Meta? Why not choose Microsoft, or Amazon, or Oracle, or whatever, or Netflix? again, this is the job of a day trader, to sort out of those 6,000 stocks, according to smart screening, which stocks you want to trade. And let me give you some hints. You want to trade stocks that are relatively stronger than the market. When we say the market, we have an index that's called the S&P 500, which represents basically the whole US market. It's not 100% true, but if you ask yourself what happened yesterday in the US equity markets, you look at the S&P 500 and the answer will be there. If it moved up 1%, your answer as a day trader or as an investor will be the market moved up yesterday 1%. And if it's down 0.5%, then that's the answer. So we want to trade stocks that are either very strong versus the market or very weak versus the market. What do I mean? What is very? Okay, so if a stock is up 2% and the market is up 0.5%, that's not very strong. But if a stock is up more than 5 or 10 or 15%, that means business. Now let me show you one of the lists that we train based on, and this we call this stock the daily power list. On this stock you can see stocks where the market yesterday closed up 1%, and here we have stocks like BMNR. We talked about it already in this one of these videos. It closed up 130%. RGC 121%. AB whatever 21%. Sunrun 16%. TripAdvisor 16%. SolarEdge 16%. Summit Therapeutics whatever. Irene goods for 7%. AOI 7%. SBET 5% and EXEL 4%. So all of those stocks are way stronger than the market, including some stocks that are up triple digit or double digit. And the same goes for US stocks that are way weaker than the market. Yesterday the list was kind of shallow, but it doesn't represent anything. The trading day yesterday, and we have only 2 stocks on this list. One is down 4%, Lennar Corp, and the other one is whatever, I never heard about this company, Meta Planet, whatever, down 4%. So both of them are down more than 4%. Bottom line, what we want to talk about is that you want to trade the extremities under certain regulations, of course, because a stock that's up 10% can easily move another 1 or 2% and sometimes 3% during the trading day. That's based on observations, our observations. And a stock that's down 5% can add another 5%. A stock that's not doing anything because there is no reason, there are no news, no fundamentals, nothing is happening, institutional traders are not buying or selling. So again, there is no wind to push that ship across the sea. It's not going to move much and you're not going to be able to make money off of it. So being that we're looking at intraday trades, and we explained and we saw examples a couple of videos ago, and also in the previous video, we need the stock to be a very good intraday mover. What does it mean, a good intraday mover? To move 2, 3, 4, 5, 6, 7, as many percentage points intraday, because if the stock moves up 1% or 2%, we can make money. If it moves up 10 cents or 0.001%, we won't be able to make any money. So that's if we want to recap, in order to find the right trade to stock, the right stocks to trade, we need screeners that will point us the stocks that are absolutely stronger than the market. When we say the market, we mean the S&P 500, and stocks that are absolutely weaker than the market. And then we're going to go and look at those charts and locate entry points and maybe trade them. So I hope it was clear. This is video number 5. We'll meet then in video number 6.